For my wonderful trading family, what is going on? It is your man JB from FFT Trading, about to give you another banger, another masterclass in technical analysis. Guys, this is your first time on the channel. My name is JB. I'm a currency and commodities trader. I've been trading for almost 4.5 years. I know exactly what the hell I'm talking about, and all I do is pump out this amazing, educational, insightful content for all of you guys, in order for you guys to become consistently profitable long-term traders. If that sounds like a nice thing you want to get into, then please hit that subscribe button. Please look at all my videos, drop me a like and drop me a comment so that you guys can tell me what you want me to produce for you. But enough of that. In today's video, what I want to bring your attention to, guys, is an extremely simple strategy that you guys can follow. So we're going to spend a little time just chilling. We've got some music on in the background. I'm going to talk about this strategy. I'm going to talk about how to apply it, and you guys can go ahead and back test it straight away. Like, as soon as this video is done, you are going to be able to have a record of exactly how to take these trades, and you're going to be able to test it out for yourself. Now, I do have a little bit of a caveat to this. You know, it's when I feel like when traders want to get a new strategy, or when they want to learn a strategy, they think it's going to be so easy just to pick it up from some trader or pick it up from the internet and just go ahead and trade it. Like, that's just not how it works, guys, because the way that I see the market and the way that you see the market and the decisions that I make day to day are going to be wildly different. So we could trade the same strategy for a month and I could have different results to you. I'm not saying they're going to be better, I'm just saying they're going to be different. You know, a lot of things to do with risk management and, you know, what we're looking at in the market. But I'm going to break it down for you very, very simply. And as like a general guide, if you want to add in a few things, take some stuff out, then go ahead and do it. So without further ado, let's begin. So the first thing that you guys are going to really need to understand is the concept of trends, simply. A lot of people will define trends as when price is making higher highs, high lows, and they would be absolutely correct. But there is a concept that I really want to bring your attention to. Okay, and it's what I call the trend defining point. I speak about it in loads of videos, and essentially what it is, it's the point in which so long as price is trading, you know, so long as price is respecting this level, then we are still in that desired trend. But what is also most important is that when this level gets broken, it provides you with a really nice place to take some trades. Okay, so I'm going to speak about it very, very briefly, but I do have a video on it. I will drop the link in the description for you guys to watch. And if this doesn't really make sense, then trust me, go and watch that video and it will make a whole lot more sense. But I'm going to just bring it over to the uptrend example, just so you guys have got a really clear understanding, okay? But obviously just know that the inverse is completely true for a downtrend. So when we are trending, okay, all we are basically watching out for is the previous high low. So if we see a higher low that makes a higher high, that is the trend defining point. So let's say we have a situation like this where price makes a new higher high. Okay, this level is now our trend defining point. So basically, so long as price trades above this point, respects this point, then we're still in the uptrend. But if price is to break down by here, then we have a very interesting thing that's going to happen. And essentially what we're going to do is basically mark this whole trend now as shifted to the downside. And what we basically do is take this marker right by here and we place it all the way up there now. So this is our downtrend, and if price respects this level, then we are still in a downtrend. Okay, so that's pretty much it, right? If we break above, we delete that. Let's say, for example, price just wants to spank us and go back there, then guess what? Okay, we are now in an uptrend, and this is your trend defining point. Okay, if we have a situation like this where price is coming back down, okay, if it comes and does something like this, guys, and it breaks below here, this is not correct. Okay, it has to be from the previous higher low. Okay, so when price makes a higher high, all you got to do is go and locate the higher low that made that high, and that is it. Okay, all this stuff in the middle is just noise, and you don't need to worry about it, because as we all know, price will do a bunch of hoo-ha, it'll flip around, and then eventually it'll start pinging off. So stop taking trades in there, just focus on this level. And for downtrends, the lower high, the previous lower high, is the trend defining point. Okay, so long as we got that concept all, you know, well and good, then fantastic. It's going to be a lot more, it's going to make a lot more sense when I go through the process with you guys. But what we're going to do, and this is something that I would advise all of you to do, is whenever you're trading, just stick to 2 time frames. I swear that's all you need. Don't listen to the whole jargon that you've got to do a bunch of fancy technical stuff, because the truth is, guys, we've all got a strategy. Everyone's got a strategy, and there's a reason why only 10% of people make money. And trust me, it's not the strategy, guys. So don't worry about it being complicated. Don't worry about it being fancy, because at the end of the day, what's going to make you a whole lot of money is yourself at the end of the day. Your ability to execute and your ability to manage risk. Okay, so don't worry about it. It's simple, but it's effective. Trust me. Ditch the whole like complicated shit now. Just enjoy, like just have a simple approach. Okay, so we're going to focus on something called a structure time frame, and then we're going to focus on something called an entry time frame. Okay, I'll write it out for you guys here. Structure time frame and then entry time frame. Okay, so our structure time frame is going to be the 1 hour, and the entry is going to be the 5 minute and the 15 minute. Okay, we're gonna use, I know I said, you know, stick to 2, but we're gonna kind of use both of these at the same time, and I'll explain to you. Okay, just work with me. All right then, so let's go back to a completely random point in time, let's go by here. Okay, and we are going to basically set some rules for ourselves. One of the things that I implore you guys to do is that if you are trading at a certain time, it really doesn't matter where in the world you are. It doesn't matter if you're trading the Asian session, the London session, the New York session, the pre-New York, the pre-London, it does not matter. This strategy works on all times, okay? However, you're going to see as with all aspects of trading, you're probably going to see the best amount of success between the London and the New York. But don't be fooled, guys. You can make this adapt to yourself. It's going to work at whatever time. You know, just don't be trading at silly times, okay? Don't be trading. We all know not to trade at like 9 to 11 p.m. GMT, okay? So whatever time that you're trading, keep that consistent with where you're backtesting, okay? So if you trade like me, where you're 6 a.m. to around 1 p.m. GMT, then just backtest like that. So that's going to be the time that we're going to go. We're going to go from 6 p.m. to 6 a.m. GMT to 1:30 p.m. GMT. So, hang on. We are literally right there at 5 a.m. So this is perfect. So what's going to be the first step? Okay, the first step that we're going to do, right? We're going to use our notion of trends and our notion of trend defining points to basically ascertain where the market structure is. Okay, so the first thing that you guys really need to do is pretty much mark out your major levels. Okay, this is like the first thing that you should do. Why? Because these can be quite sensitive, but we'll speak more about that later. There are times where you can disregard it, but for now, just mark out your major levels. And then once you've done that, what I want you to do is be able to track and look back and be like, okay, have I seen this pattern, play out? Have I seen this pattern play out? Okay, where are we? Right by there. Okay. And what you're going to do is be able to find out where we are in what I call the overall trend. Okay, so find the overall trend, and I'll talk about what that is now. So if this is me, okay, I'm looking at price, I'm starting right by here. Okay, oops daisy. Sorry guys. I'm starting right by here, and all I'm doing is going to look back and see where the market structure is. So when you mark out your major highs and lows, it makes things very easy for yourself. So one trick that I basically, tell a lot of people that I help out in trading, when I teach them this concept, right, I honestly say to them, go and find me this and then we'll work. Like, don't worry about where we are right now. Just find me this on the chart that you're looking at right now and we can work. So what I can see is right by here. Okay, let me go ahead and delete these big fat orange circles. Right, what I can see by here is this pattern. Why? Because we've trended upwards, we've formed a higher low, price has broken above, and now it's dropped back down. Okay, so that is this pattern right by here. And we know that what we got to do is now say to ourselves, okay, once I've seen this break right by here, price is now in a downtrend. Okay, simply put, don't worry about where price is. Just say to yourself, price is in a downtrend. Okay, we mark this current level, and we also mark this as our trend defining point. Okay, so now we're going down. Okay, and then we're going to be using this model, right, which I've explained in the trend defining point video. You guys can I don't want to keep shilling it, right? But I'm just saying, for your understanding, you're going to have to be able to ascertain, price like this and be able to draw out your levels. So what you're doing is something like this. Okay, I'm seeing price makes a lower high, it makes a new low, and we know that when price makes a new low from a lower high, this is our trend defining point, and we're just scanning to see where price is. Okay, price then forms another lower low, and then we go back to find the lower high that caused it, and it's right by here. You can see how it's kind of lined up with the previous, so just make it simple for yourself. Don't worry too much. Don't say it's this level, just say it's this level. Simple. It just is what it is. Okay, because price will do this quite often, won't it? It'll do this, it'll come back down, it'll go boom, it'll go boom, it'll go boom, it'll go boom, and then it'll go boom. It just does that, but you've got to be able to draw it like this to be able to see it on the actual chart. Okay, so this is our trend defining point. So long as price respects this level, we are in a downtrend. But price has broken above. So what do? We have now shifted to an uptrend. Okay, that's this model right by here, guys, where price does this. Shaboom, there we go. Uptrend confirmed. What do? Stick this down by there. This is our trend defining point, meaning so long as price trades above here, then we're in an uptrend, so long as it doesn't make a new high. Okay, another thing to consider, right, is when you are drawing out your higher highs and higher lows, okay, what you guys need to create as a rule for yourself, okay, so let me go ahead and put some rules for this strategy, okay, is that new highs and lows are only made when candle closes beyond the wicks. Okay, so the way that you are going to trade this strategy, you are going to define your key levels like so. Okay, you are going to, just using this for example as a key level, you're going to draw it from the bodies all the way to the wicks, and if you see any wicks that surpass this level, you're going to just extend it. And that's all you're going to do, is just extend it. Okay, so this is one high for us right by here. I don't care that price has dipped by here, moved up and dipped by there. This is all one high. Okay, and the other hang on a second. Okay, the other thing is that key levels are defined by swing highs, lows, or areas where multiple wicks and bodies are. Okay, so an area that has a lot of wicks and bodies, okay, because not always is going to be like a true swing high or swing low. So this pretty much obviously is, everyone that trades know this is, but at this point, if you were right by there, you wouldn't really be able to tell that's a swing high. But you can see that there's lots of bodies by there, lots of candles, lots of wicks, so you call that a key level. Okay, so it's very simple, very, very easy. Okay, so what we're doing now at 5 a.m., okay, all we're looking for now, which is the next step, okay, hang on a second, let me actually put steps in here. Sorry, people. Steps are, okay, number one, on 1H, find the overall trend. Okay, so that is how you find the overall trend, how I basically just explained. So you go through this whole process, and now we can see that through the, cutting and chopping and stuff, we are now in an uptrend. Okay, so this is our trend defining point. And then once you've found the overall trend, you're going to basically mark out your current structure. What is current structure? Where price is currently. Okay, so you could even do something like this. Okay, we've marked out a higher high. Okay, we've got our trend defining point, or TDP, okay, whatever you want to call it, and we've also got, we've got a low potential, we've got a current, let's call it a potential lower high right by here. I know it's a lower high, but the reason why I call it a potential lower high is because we use our, higher low. Tell you what, I'm going to scrap the whole potential thing. We're just going to call this the current higher low. So we're going to define them as the current higher lows and the previous higher lows. That's how we define the trend defining points. Okay, so once we've marked out our current levels on the 1H, okay, the next thing we are going to do is find a signal. Okay, so find a signal, I'm going to put in brackets evidence. So we basically need to see some kind of evidence to take a trade, right? You don't want to just be trading randomly. So all you're going to be doing is waiting for the 1H to do something, okay? So we just want to basically wait and see. We should mark this out by there as well. Sorry, there we go. Awesome. So we got our key levels in place, and we're basically looking for some evidence. And just as a tip, guys, when we see price like this, where it's really jam-packed, don't bother doing anything here. In my opinion, personally, don't really bother doing anything here. And if you want to extend your zones to like this, but you're aware that this is kind of like one zone, this is one resistance level, then absolutely. Okay, this is not looking too bad, but the problem is we're locked in this tight range, so we're not really going to take any trades because we don't have much room because of this key level by here. Okay, so this is something I'll talk about in a little bit, but let's just keep on going to see where we can find some good evidence. Okay, and let me go ahead and just put a note by here. Good evidence, or signal evidence can look like price breaking out, respecting a level, or price clearly moving towards a key level. Okay, and that's simply it. Okay, we're going to put some more rules in place, but let's go ahead and actually no, let's go and put ahead a rule in place by here, just so you guys can understand. Okay, if we cannot get 1-to-1 to the next key level, then we're not taking the trade. Okay, and the reason why I'm saying this is because you're going to save yourself a whole load of losses. And the thing that I really want to drive home to you guys is looking at price and being able to say, does it look worth it? You know, does it look worth it? We do get some evidence right by here. You know, we got some evidence right by there because price had, you know, reacted to this level, which is noted, you know, with our, I should put respecting / reacting to, or reacted to a key level. Okay, but yeah, we got this, but we don't have much room to this key level. Okay, how do you know it's a key level? Because you've marked out your current levels on the 1H. Now we pretty much got all our things in place. I'm going to just go ahead and wait for something to happen. Boom, we got something. Okay, what do we have? Good evidence for buys. Okay, now I'm really, at this moment in time, I don't care about anything on the left. I know I'm talking about my major levels, but that will come in time. Sometimes they're applicable, sometimes they're not. When you're able to clearly mark out where the trend has gone, as soon as you've done this whole hoo-ha, once you've figured out where price is currently and you've done that process of finding the TDP, then finding where the levels are broken and finding where the overall trend is, at this point, I swear, you can regard everything to the left. Sure, this is probably a 4-hour level, right? You know, sure, this is probably, oh my gosh, there we go. That's just confirming what I was going to say, okay? It's a 4-hour level, but at this time, we don't care about those levels. This strategy does not care about the daily, does not care about the 4-hour, does not care about the 2.5 hour, does not care about the 30-minute, 40-second, 50, whatever. I don't give a shiz. It's about the cuss then, but I don't give a shiz. 1 hour and 5 minutes / 15 minute. Okay? Once you get the whole evidence, once you get the break of the TDP, once you've got the trend, once you basically identify we got an uptrend, don't care about nothing to the left no more. Focus on what's in front of you. So now that we've got our signal, what's the next thing? Okay, now we're going to go to the 5-minute time frame. And what we basically want to see is where can we take some entries, okay? This is where the whole notion of breaking levels gets really, really interesting. Now, you guys, if for whatever reason, you know, you're taking longs, when you get to your entry time frame, if price is looking like this, just ignore this whole chart for a second and just look what I'm about to draw. Okay, if price is looking like this, okay, and we get the evidence from the 1 hour that price is potentially going to go bullish, we don't always have to wait for price to break like this. Okay, yes, this can tell us, yes, of course, this tells us that the trend has shifted, and if we get this, it's even more evidence. Okay, but what we're basically looking for, once we get that 1 hour bias, we're now going to basically be looking for the evidence on the lower time frames. So if you were to see something like this, I swear to you, this is good. This is what you want, because eventually price will probably break out by here and you get to have the nice sexy entry. Even if it went something like this, I swear to you, even if it did something like this, okay, and you take a loss and then it comes back by here, you're taking that trade and it's pinging off. Okay, I'm telling you, right? So just keep that in mind. You don't always have to wait for the break of the trend defining point. So what we're looking for when we get to the 5-minute time frame is that we are simply looking for the evidence. So I want you to look at the 15-minute as well. If you can see something like this, right, where, sorry, I should have mentioned, our entries are going to be like this. Okay, guys, we're going to be taking break and retest entries. Sorry, I should have mentioned that. What is a break and retest? When price has a key level right by there and breaks above, we are waiting for price to come back and tap into that level before shooting off. The exact opposite is true for a downtrend. It's such a powerful pattern, and that's how we're going to be taking our trades. Similarly, we are going to also be taking what's called double tops and double bottoms. So when price does something like this, we're going to take those trades. And when price may want to do something like this, okay, we are also going to take these trades. Oops, daisy, I didn't actually get to draw that. So those are our two entries, double tops and double bottoms. But before you draw any double tops or double bottoms, you've got to basically see that the evidence on the 5-minute or the 15-minute has been sufficient, okay? So now that we can, what are we looking for when we're seeing evidence? Okay, think of it like this: we get the bias from the 1 hour that we're bullish. Guess what we want to see on the 5-minute or the 15-minute? We also want to see bullish, right? You don't want to see bearish when you want to take a bullish trade. It doesn't make sense. It has to be all lining up, and we can see this right by price has broken above and it's retested by here. This is fantastic. Okay, now you've got everything for the trade to be taken. Okay, there's two things that you can do. Okay, you can put your stop loss, okay, behind the retest level. So remember I said you draw it from the wicks to the bodies, but if you wanted to extend it, this is where your own discretion can come into play. The safest thing to do is to do it like this. Okay, well, to be fair, if you're using the 15-minute time frame, the safest thing to do is to stick your stop loss behind the previous trend defining point on the 15-minute time frame. This is objectively, now listen to what I say, objectively the safest place to put your stop loss. Why? Because we're expecting price to be rising, and if price comes down and smashes down by here, then guess what? It's violated this structure, and it's basically told us that our whole trade idea is wrong. Okay, it doesn't faff around by here, doesn't do this and then shoot up. No, it has all this room to breathe. We put our stop loss in the safest place, right? The trend defining point, and if it comes and takes us out, then we were just wrong about the trade. However, if you get the evidence that price is respecting this key level, then of course you can put your trade, your stop loss like this. You just have to be prepared with what comes with it. You're able to get some nice risk to reward trades, but you're also going to, potentially take some losses by here, whereas you might have been saved by there. But as a general rule, when price breaks out and forms some wick projections, this is perfectly fine. Let's go ahead and look at the 5-minute time frame. Okay, so we're basically seeing prices trending. There's two things you can do right here. Is that you can wait for, because we can already see that the 5 minutes already bullish, we're good to go for trades. Okay, we can either wait for price to come down to this area so that we get a nice double bottom. So the anticipation is that price would come by here and then we would essentially shoot off right by there. That's one thing you can do, or if you want to, you can go ahead and take a break and retest right by here. So let's just go ahead and see what price does. Okay, does it want to give us an entry? Okie dokie. So if you're not able to get an entry, then you just got to be patient and know that one is coming. Okay, so let's see if we can get a break and retest right by here. So how are we going to take this break and retest, and how are we going to take these trades? I'm about to tell you. Okay, so you wait for price to come into this level, you wait for it to close, you wait for it to show that it's kind of respecting a little bit. Something like this is absolutely perfect. Now you've got two options. Like we said, you can put your stop loss behind the safest place, which is the TDP, or if you want to, you can put it behind here. But if you see something like this where a wick will extend past this zone, you really want to put it behind the wick. But if you're seeing a situation like this is what I'm saying about using your brain, guys. If you can put your stop loss, like if you're going to put your stop loss by here because of this wick and you want to get better risk to reward, what's it going to harm if you just do that? Now it's in an even safer place. So what you do is something like that. Okay, it's completely up to you though, guys, but I'm just giving you the guideline to the strategy. Then what you do is that you set your stop order to this entry and you do nothing but let the trade play out. So when you're setting your targets, if you have stop losses of around, say, I always recommend to have about 3 is the minimum stop loss, because spreads can just take you out if you have a 2-pip stop loss. So anywhere between 3 and I would say 7 is okay for a 1 to 3. 7's kind of pushing it, but I would honestly say from like 7 to 15, not even 15, like 7 to 11, you want to go for 1 to 2s, and above like 11, you want to just stick to 1 to 1s. Why do I say that? Because the amount of room, the amount of time that price, sorry, the amount of distance that price will have to travel to get there is going to take you a while. But again, it's completely up to you guys. I'm just giving you a kind of general guideline. So let's go ahead and see how this trade plays out. It does this little thing. It wants to do whatever. It wants to take us out for a stop loss. God damn it. Okay, no problem. So what we do in this situation is two things, okay? If we take a stop loss, we also want to see what are we looking at on the 15-minute time frame, okay? Is price still respecting this structure? Okay, if we take a loss on the 5-minute, it does not matter, but we do need to have this in mind before we start thinking, oh my gosh, prices, change trends and we're here and yada yada yada. Okay, two things you got to also do, should have brought this in mind, is that you want to basically, what you really want to do is look to see what the 1 hour is doing. Okay, like I said, you're forgetting all this nonsense by here, and you want to just see that the 1 hour is still respecting this structure. Okay, because honestly, if you took a loss by there, you probably do want to, you want to wait for the 1 hour to close, really. But again, it's an anticipation game. Are you going to anticipate that the 1 hour is going to take you out and then go push on? It could happen. But as a general rule, if you want to be as safe as possible, just wait for the 1 hour to close, because how do we know it's going to close by here? For all we know, it could have just gone straight down by there. So once you wait for it to close and you can see that it's respective structure, go ahead and look at the 15-minute time frame. Whenever you see like a trend defining point break on the 5-minute, just check the 15-minute first. Okay, and what you're going to do on the 15-minute is mark out two levels. Okay, like we said, this is our trend defining point. Because why is this a trend defining point? Because it's the previous higher low which caused the higher high. So all we're going to do is basically wait to see how price reacts by here, because as long as it respects this structure, we are still in an uptrend. Okay, but what is also happening, this key level that we've drawn, it seems to me that price might be respecting it. So let's go ahead and see how price reacts. Okay, is it respecting the structure? I definitely think it is. Why? Because we've got this right by here. So you got two things. You can play it a little bit aggressive and set your stop order something like this. And because you've got some wicks by here, albeit it's not the strongest, you can go ahead and put your stop loss there. Like I said, the safest place is down by here. Remember what I said to you guys about how you could have, if you took the trade on the 15-minute time frame? We'll speak about that in a little second, okay? Because we showed the example with the 5-minute, but let me just show you about the 15-minute. They have their benefits, okay? Two things could have happened. Let's finish the 5-minute example first, okay? So you either put your stop loss by here, but you can also say, well, I'll put my stop loss right by there because it's respecting this structure. If you're happy to take this trade, then you can go ahead and take it. But what some people might want to do is something like this. No, I want to see a bounce first. I want to put my stop order right by there. My stop loss is around 14 pips. I'm going to go for a nice juicy 1-to-1, keep it nice and simple. I just want to take out my loss that I just made, no problemo, and boom, 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 sure enough, it gets hit. Okay, so that's what you would have done on the 5-minute time frame. If you'd stuck to the 15-minute time frame, which I will advocate, if you can take the 15-minute trade with the 15-minute structure, then take it. But what tends to happen sometimes, guys, is that when you're trading the 15-minute, price is doing this, and it's just rising and rising and rising. Okay, but on the 5-minute, this is a trend. Do you understand? So it has its benefits. So sometimes you can't get in on the 15-minute, right? You have to take those 5-minute trades. So let's assume that we didn't get a 15-minute entry by here, and the 5-minute was all we had. You would still follow that exact same model, okay? But let's just delete that, okay? Oops, actually just take it back, but let's just delete some other stuff, okay? Let's go back to where we were, right? And doing something like this, okay? This was really the ideal trade. I just wanted to show you the two examples, okay? Because what did we say is that we could have put our trade like this, if you want to put it up by here, that's fine. You've got the structure. Price is showing you that it's respecting the structure. So you set your stop loss right by there. Okay, we'll do 9 pips. I think, did we take a loss by there? No, we didn't. Price still did its thing. Okay, so we can set 1 to 2. Why? Because our stop loss is only 9 pips. That's within our range. It's okay. Bish bash bosh, bish bash bosh. Look at that, lucky. Bloody hell. All right then. So that's basically it. That is simply it. Okay. So let me go ahead and just add those notes. What do we put? Okie dokie. Just to add to the steps. Okay. Look for the evidence on 15-minute, 5-minute, and take break and retest entries using advice for stop loss. Okay, you guys remember what I said about that. You guys can go ahead and look back, and that's pretty much it. Oh, let me go ahead and put entries equal break and retest. Let's put actually break and retest, and then double tops slash bottoms. Okay, we're going to just keep on trading, guys. We're going to keep on trading. Take a picture of this if you want. I'll go ahead and just I'll go ahead and save them, right? So if we got to pull it up some other time, we can do that. Awesome. So that was that day. Let's go ahead and keep on going. I think we're sitting at, we'll just call it break even for that day, you know, depending on how you traded, break even or plus 2R. Okay, oopsie daisy. So following that exact same process, okay, what do we have? We have clearly an uptrend. Why is it an uptrend? Because we'd identified that this was our trend defining point. Price has broken above by here, which means that the higher low that caused that uptrend is now trend defining point. But we're going to basically be quite liberal about it, and we're going to basically scan back and see, is price touching another level? If it is, cool, there we go. Right? One thing the strategy doesn't do, which I talk about in millions of videos, is that we don't do something like this, where the key level starts by here and extends over there. Okay, we just don't do that. The key level by here also doesn't get extended. We don't do that. We just go off the recent levels. So if we identify this as our trend defining point, what I want you to do, guys, look to the left. Just see, does it tap into any levels? Then keep that level as it is, because these wicks, I swear, are here to help you. Okay, I promise you, these wicks are here to help you. But you've also got to know which wicks to include and which wicks not to include. Typically speaking, if you have what I call opposing candles, so if we're in an uptrend and we see bearish candles, or a downtrend and we see bullish candles, these are where you're going to prioritize your levels. But you kind of have to just, you know, because the thing is, you could have candles that like wicks will just like form down by there, and some of you guys are probably drawing key levels that are just like down, you know, right by here. Do you see what I mean? Like you know, where does it end? It has to end at some point. So the way you figure this out is that you find these obvious levels, you use the wicks, but when you're scanning back, just basically find an opposing candle, which in an uptrend is a bearish candle, right? If it has a wick, keep it at that. If the one to the left is bullish, forget about it, okay? And the inverse is true for a downtrend. If we're in a downtrend and we're trying to find the most accurate key level, we're going to basically scan and find our obvious key levels, but then the way where we end it is that we're going to look for opposing candles, which in a downtrend is bullish candles. So we'll look for the bullish wicks, and we're going to basically try and draw as accurately as possible. If we look to the left and we see a bearish wick, we can forget about it. I hope that made sense. Okay, so what do? We mark out our overall level. Okay, so overall the trend is to the upside. Okay, oops, daisy. Okay, but then we mark out our current levels. Okay, so our current levels are like this. All we do is go and see, okay, where's my key level? Okay, swing, you know, small high right by there, major high right by here, and that's it. When we're looking backwards, this is all we're doing. Okay, we're just going to go back, and that's it. If there's nothing else to the left, right in this space, forget about it. Okay, don't draw this level. I don't care about it. Don't want to know about it. Forget about it. Okay, so remember from our rules, we can only take trades if we've got the evidence to here. Sorry, if we can get 1-to-1 by here. Do we have evidence on the 1 hour that we can take some buys? Absolutely, because we've got all these wick rejections right by here. So we're going to look on the 5 minute and the 15 minute. Do we have anything bullish? At this moment in time, no. Don't look at this as a holistic thing. Don't look at the whole thing. Look at where it is currently. Just look back and see, okay, it's going down. Okay, it's going down, so I'm not going to bother with it. Okay. Then if we want to take some buys, all we're going to do is wait for some kind of bullish sentiment, which is looking like a breakout. Okay, and we don't get a breakout, right? Why? Because we mark this as our key level. Okay, we need to see something bullish first. This isn't bullish. A bullish signal would be something like a breakout above by here. It's the exact same thing, right? But, you know, as we were doing on the 1 hour, but for 5 minute and 15 minute, you want to see bullish behavior. Okay, so if price is breaking above levels, then boom, you've got it. If it doesn't break above levels, then forget about it. Okay, forget about it. Man's in the mafia. Okay, cool. So, okay, when we see price like this, it's just like shit, bro. You just don't want to trade it. Why? The candles are small, there's no volume. Just wait for a nice big bullish candle like so. Okay, cool. We've got a nice big fat bullish candle, but we still got to see that bullish behavior, that bullish sentiment, that bullish evidence, whatever you want to call it. Okay, we're still not getting it. Okay, we get it right by here, but we've got absolutely, we're literally right at the resistance level. So at this point, we can kind of just forget about it. Okay, Now, this is something I'm kind of against because price is kind of consolidating. I'm not really a big fan of taking trades by here. If you guys want to, sure, let's go ahead and see if it played out. And that's the reason why I don't do it. And it was news that day, probably CPI. Okay, so we didn't really trade that day. There wasn't much to it. So all I'm doing, guys, is walking through the process just so you guys are like getting confident and knowing what to do. So you just, able to see what I'm looking at. Okay, clearly we can see the overall trend is to the downside. This was our trend defining point. It broke. Now the trend is to the downside. Where's our trend defining point? Sounds a bit silly, but it's right above here. Okay, so long as if price does not make a lower low, this is the level in which is the last level in which we can call this a downtrend. Okay, so price breaks above here, it's an uptrend, baby. Right, so the first step was to mark the overall structure. You've pretty much done that. Okay, you don't need to do anything else. You've marked the trend defining point. The current, okay, mark your lower low, of course, but we want to see what on earth is price doing. Okay, it just looks like a bag of ass, bro. Like, for me, what would I do by here? Honestly, I'm going to mark this as a key level. Okay, I know it's a bit of a shit key level, really. Why is it shit? Because it's just one candle. But honestly, price is looking so undecided and so messy. I don't want to take any chances. I want to see something very strong, which is just like this. Why is it strong? Because price has broken below the wicks and a breakout is part of our evidence. So this is all good. And before you do this, guys, make sure you've marked your levels out. Guys, we've made a lower low. Why? Because price has broken below the wicks. So this trend defining point is now by here. Okay. And remember what I said about where key levels end? We were going back, finding an opposing candle. Once we see that, anything else, forget about it. Unless it's obvious, okay? But we don't need to do it by there. That for me is a bit pedantic. We can just put it by there and forget about it. Cool. So now we've got the evidence from the 1 hour. We need to find the evidence on the 5 minute and the 15 minute. Always start off on the 15 minute. I promise you, it'll do you much, much better if you started on the 15 minute. But the 5 minute does have its stuff. So what I would do here is wait for price to come and retest by here, but it can also come and retest. Sorry, we can take these. What the hell? We can take these double tops by here, and you'll basically see how we can take these trades with a lot of accuracy. Okay. So we want to wait for price to close. Okay, so it didn't close by there, and I'm going to probably draw this key level out by there as well. I'm not going to take these retests because I only take break and retests that look like this. Oops, a daisy. Okay, I'm giving you guys loads of little nuggets, so you better be paying attention. Okay, I only take break and retests that look like this. I don't take break and retests that look like this. Does that make sense? Okay, that's kind of what this is by here. I don't do that. There is a place for it there. There is a place there. But, again, this is for you to do your own testing and stuff on. Okay, do I get a reaction by there? I want to see one more. Okay, I'm selling it. That is good enough for me. Why is this good enough? Because we've got the 1 hour break below by there. We've got the 15 minute coming back to our double top area. We've got the rejection. That's what we want to see. As soon as we get that evidence, bish, bash, bosh, we're going for it. Okay. Safest place to put the stop loss is right by here. So that's exactly what I'm going to do. And I'm just going to set myself, do you know what? We'll go for a 1 to 2 right by here. It's not looking too bad at all. There we go. So we did get a little bit of help from the news. Fantastic. Absolutely wonderful. Okay, once we take a win, we can go to the next day. We don't really need to worry about it. Okay. Or you guys may not have wanted to trade that. It's fine. I mean, on the day, I might not have wanted to do it as well. To be honest with you, we could have just left that one out there. But if that's what you want to do, it's what you want to do. Okay, let's go ahead and do the whole process again. So the first thing is mark your overall structure. Okay, remember for downtrends, we're using this model right by here. Bish, bash, bosh. Okay. Previous lower high is our trend defining point. So we're going to be marking out this level. We're going to be marking out the retest level, and we're going to be marking out the lower low. Okay. So we go ahead and mark out the trend defining point, which is right by there. We go ahead and mark out our lower low. Okay. In this instance, we don't really need to worry about the retest level. Why? Because price is kind of just like pushed in by there, so it's kind of invalidated it. We only really care about this level to take trades from, to see if the 1 hour wants to respect it. But this is where it gets very interesting. Do you remember how I said in the in this point by here? Let me bring it up for you. Right, do you remember this? Where is it? look for the evidence on the 50-minute/5-minute and take, oh, hang on, no, sorry. Number 3, find a signal evidence. Note, signal evidence can look like price breaking out, respecting/reacting to a key level, or price clearly moving towards a key level. Okay, when you see a situation like this is something I really wanted to bring your attention to. If this works out, guys, which it does at times, I promise you that it does at times, I just can't guarantee it's going to work right here. But this is where you can get massive trades. Like, I'm talking huge trades. Because if we've got a downtrend and we know price is going to make a new lower low, why don't we try and just attack it, right? So we've got all the evidence, right? We basically will mark out the 15-minute. So what we're saying is okay, I want to see price maybe come back and retest this level. If I want to take a 15-minute trade, it can come back and retest by here, or it can come back and retest right up by here. So I should be saying, when I say retest, this is a break and retest, but these are double tops. Okay. Also, if you really want to, you can see to yourself, you know, okay, this is a mini trend. This is the trend defining point. If I really want to, I can take trades right by there. If you really wanted to take a sell by there, genuinely, you could have something like this. We got a wick to say that this is a reliable level and let's just go for it. There's a lot of ways you can trade this, right? It's all down to you and what you fancy. Whereas for me personally, what I would do, I would look at the 5-minute time frame like this. And because for me, I'm not too worried about these internal trades, these internal levels. I'm not really that bothered. But what I can see is a very nice clean break and retest on the 5-minute time frame. So I'm going to now wait for the 5-minute to react. Okie dokie. This would be a double top, but I don't like seeing double tops that do this. Okay, so double tops that kind of go up and then down and then like straight up like this, I don't like that. Okay, I need to see it kind of pause a little bit and then it goes up. Okay, so I'm not a fan of taking this. Okay, now I can take this. This is looking a bit better, but this bullish candle is giving me a bit of anxiety. That's looking better. Now we're good to go. Look at that, 3.5 pips. Oh, this could be a banger, you know. Sheesh! What's that, bro? Fucking 1 to 10? Are you mad? Are you mad, bro? This is what I'm trying to tell you guys. Keep it simple. Sorry, just gets me gassed because when I'm showing like concepts that I'm trading, and you know, it's gonna work out for you guys if you follow this kind of stuff. But it's only going to work out. You see how I was patient, guys? I didn't really, you know, you could have taken this to sell by there, still would have worked, but we want to see clean structure, and that's pretty much it. So I think I'm running out of time, guys, if I'm being totally honest with you. I want to kind of do more, but I've given you a whole bunch of information, and now it's all down to you now. Do you know what I mean? Go ahead and take what I've told you. Go ahead and backtest it. I know it's going to work out for you, and you can go ahead and take these huge trades. Guys, if you've got any questions or you want to see more content, then please let me know. If you want me to go deeper into this kind of stuff, maybe go for longer sessions, I absolutely can, but I'm just conscious of the guys who don't want to be spending too much time watching this video, who just want to get their nice juicy information, dip, and then out. So, but yeah, let me know, guys. If you enjoyed that, please drop me a like, drop me a comment, and as always, subscribe because it helps me out so much, and I get to interact with all of you fantastic people. So thank you so much. I'm out. Have an amazing weekend, guys, and I can't wait to see you on Monday. Have a good one. Take care.